Mortgage rates increasing for the fourth straight week, according to Freddie Mac, inching closer to 7%. The average 30-year fixed rate is 6.93%. Here with more on the housing market, we've got Sean McPeak, who is a licensed real estate agent and team lead at Serhant. Great to have you here with us in studio.
Brad, thanks for having me.
Absolutely. So mortgage rates climbing. Where are you seeing the 30-year fixed rate by the end of the year? What's your projection there?
I'm seeing it being brought back down below 6%. I think the sweet spot for us here in New York would be around 5.5%. I don't think that's going to happen, but I predict around 5.8% to wrap up the year.
What needs to happen for that to actually come to fruition?
I think the Fed needs to cut rates more, and I also think that the pricing of risk into the market also needs to be factored in order for that to happen. And I think economic growth is going to help that.
Are your clients sounding like they're anticipating sweeping cuts from the Fed, even as the latest data that we've seen this morning now is looking at a CME Fed Watch probability of us not seeing a cut until late this year, the back half of this year?
I think everybody has the grass is greener on the other side syndrome. Okay. So I do think that everybody is holding with bated breath. However, there are deals to be had in the market right now. If you're finding the right situation, you can negotiate fantastic deals with great concessions.
What do you think is going to happen in order for us to see better conditions, lower prices here, and your thoughts on the housing market recovery more broadly?
I think you are seeing a lot of better conditions for buyers right now. In a lot of states, it's either the market has cooled off or there's been an influx of inventory in some of the larger urban markets and some of these middle of the country type states. So I do think conditions have improved. However, certain markets like New York City, where there's a lot of regulation and very high cost of labor, we are seeing less supply coming to market, which is also kind of keeping prices propped up.
What are you seeing as the most persistent risk right now to the housing market? And perhaps it is what you just mentioned and ended on, which is prices and affordability.
I think prices, prices of materials, labor costs, regulations, and then just the overall economic outlook. The job numbers, I think there's a little nuance to some of these numbers. What type of jobs are people getting? What type of jobs are people losing? I think there is a little bit of stagnation in the white collar category, which would be primarily my market.
Interesting. You mentioned as well some of your biggest risks, regulations on building and zoning, and it seems like there's more of an appetite that's brewing right now among the incoming administration to try and open up some of the public lands for building. I wonder how you look at that from the perspective of a person that has continuous talks with people who are looking to buy existing homes and what that could eventually mean as well if there is more supply that comes online.
Well, I think a natural infusion of supply is going to help the buyers and stabilize prices more broadly. So, but it's not like an oil supply promise, right? We need actual supply in order to stabilize prices and to have options and people to shop around and look in different markets, different neighborhoods, different territories.
Help our viewers out. What are 3 tips that you have for those who are, getting there in New York at least, getting their big puffer jackets on, going out and doing some home shopping this weekend?
I think go look at some of the houses that have been on the market for a long time. So the days on market don't necessarily need to be brand new. Some of these properties languish on the market because they do have poor marketing, they have bad photos, maybe they have a wrong data point.
Is that simple, just bad photos? Look for the listing with bad photos.
We live in Instagram, Pinterest, Architectural Digest type of world. The buyer has a much more discriminating eye than they did in 2010.
That's a fair point. You also talk about limiting viewing to less than a certain amount of houses per day. What's the sweet spot there?
I think 6 is the sweet spot, but if you really need to see 8, I think after a long day of shopping for houses, that it all kind of blends together and you become fatigued, and it's really mental fatigue. So I think that 6 is about the sweet spot. You don't want to go too much further than that. And
so lastly here, what about collecting your own documentation when you're going on these visits? What you should be doing as you are collecting your own data?
I think my personal practice is to take a picture of the address of the house and then take a couple photos inside to remind you of what you like, what you didn't like, maybe there's some defects, and just almost use that address as the cover of your photo album on your phone and use the rest of the videos and photos you take just to kind of remind you of what you liked, what you didn't like. And the listing photos can be, they're made for marketing. They're not made for necessarily your education. So it's good to have these things referenced back when you're doing your research.
All right, well, fortunately for me, if I forget to take a photo of the the address, there's at least geotagging within my iPhotos on my phone as well here.
sir.
Sean McPeak, thanks so much for taking the time.
Thanks for having me.
Appreciate it.